Good morning, and you're watching Market Cafe on ET Now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Very good morning to you, Cheryl. And handover doesn't seem to be that good coming in from the global markets.
Absolutely, but you know, Vinny, this sort of a handover has a lot of different facets that you need to look at, and the key takeaway in today's handover will definitely be what's happened to the dollar index. If you look at the dollar index, that's the one that is at the lowest level since August. It has slipped below that 105 level as well in the overnight trading session. As you can see it on your screen, 104.8 coming in for the dollar index, lowest since August, and also it has slipped below its 200 DMA. Or if you look at the other currencies, what other global currencies are doing with the dollar index at this juncture, if you look at the euro, it has actually reached its highest level since June 29th against the dollar. You have dollar that is weakened since August 18th against the yen. Sterling also is seeing good strength. Sterling is at the highest level since June 27th against the dollar. Also, if you look at the Asia Pacific currencies as well, so if you look at what is happening with Australian as well as the New Zealand Kiwi, all of them are seeing very good strength against the dollar. So the dollar index is going to be a key point in today's trading session to watch out for, and let's see what reaction comes in for the rupee as well. But talking about the handover that we've got from the Wall Street, it's a mixed close that we got from the Wall Street. You had the Dow that ended low by about 0.6%, while S&P 500 ended flat with a negative bias, and Nasdaq ended flat with a positive bias in overnight trading session. Also, one of the reasons why you had a mixed kind of a handover from the Wall Street is on back of the key data that we got yesterday. Also, a sell-off that Salesforce. That's what dragged Dow Jones lower in yesterday's trading session. You also had, you will be having the non-farm payroll data that will be due today. So all eyes on that particular front. You have even the 10-year yields that have actually slipped in the overnight trading session. If you look at the 10-year bond yield, US 10-year bond yield, it is actually slid to a 10-week low, while the 2-year bond yield has actually fallen to the early October low. So that's the way how the Wall Street ended. As of now, if you look at most of the Asian markets and what they are doing, remember that we've got news flows coming in that China may look to actually ease some of those stringent COVID-19 measures. But for now, if you look at Shanghai, it's opened absolutely flat with a negative bias. Hang Seng is holding on to gains of about 0.3% as we speak. Talking about what Nikkei is doing, it's down about 1.7%, and Kospi on the other hand is lower by about 0.7%. SGX Nifty also indicating a muted start for us. So yes, that's the way how the markets are, or the handover that we received, Vinny. Key point is definitely the dollar index.
Okay. Key point is the dollar index, keeping an eye on that one. Let's move on and get at some global update. Now, Joe Biden used the first state to visit on his presidency to demonstrate unity with France's Emmanuel Macron on Ukraine. They did, however, show a willingness to speak to Russian Vladimir Putin and assuage the European anger over US subsidies.
And the world's poorest countries now owe about $62 billion in annual debt service to official bilateral creditors. This is according to the World Bank president, and this is an increase of about 35% over the past year. He also warned that the increased burden is increasing the risk of defaults.
And the International Monetary Fund Managing Director said that the chances of global growth falling below 2% next year was higher. The IMF will update its economic outlook in January. She also said that the picture has darkened recently on the basis of what we see in the consumer sentiment and in investor sentiment.
And China is set to announce an easing of its COVID-19 quarantine protocols in the coming days. China is also planning a reduction in mass testing, which would be a marked shift in their policy. This actually comes against the backdrop of anger over the world's toughest curves. A top official, that's Chinese official, also said that the ability of the virus to cause disease was weakening.
Wells Fargo and Company has cut hundreds of jobs in its mortgage business across the country. Higher inflation and rapidly rising mortgage rates have started to weigh on the housing market. Refinancing has also come under the pressure due to the US Federal Reserve's aggressive monetary policy tightening campaign.
And Tesla plans to recall more than 4.35 lakh cars in China and issue software updates to fix a rare light issue. This is according to the Chinese market regulator. The regulator also said that this poses a safety hazard for the drivers, and Tesla will issue software updates remotely to fix the problem.
That was all the global update we had for you all this morning, but we'll slip into a very short break. Don't go anywhere. We'll be back with more domestic update after this. Welcome back, and you're watching Market Cafe on ET Now. Let's just talk about Digi Rupee. Now, with the pilot of the RBI CBDC beginning, ET Now's Ankur went out on the streets actually, to test the rupee and take a look at what is happening there.
Central bank digital currency is up for pilot testing, and I am standing at a location where this testing is being done. You would be wondering what will exactly happen in CBDC. Now I have with me the QR code. This QR code will be used for transferring of central bank digital currency to small merchants for payments. As it is done in UPI, now this is different kind of QR code which is being used. Remember, this is just a testing purpose. The final outcome of testing may be different, but as of now, this is what the QR code of central bank digital currency look like. We also have with us the owner of this shop where RBI will be testing. मेरा आपसे पहला सवाल यही है कि आपसे क्या बोला गया है कि किस तरीके से ये टेस्टिंग की जाएगी और इससे क्या फ़ायदा होगा? क्या आपको कोई ऐप डाउनलोड करने को बोला गया है?
हाँ सर, ऐप डाउनलोड करने को भी बोला गया है हमें। जैसे कि वॉलेट वाला ऐप कुछ है वो हिसाब से वो होगा और डाउनलोड आप वो करवा के देंगे हमको। बैंक वाले RBI वाले करेंगे या फिर IDFC वाले करवा के देंगे, ऐसा हमको बोला गया है। और इसका फ़ायदा तो मैं बोल ही चुका हूँ क्योंकि मतलब ये 8वीं से लेके लास्ट तक का डिपॉजिट कर सकते हैं पैसा, और ये इस बैंक में या RBI बैंक में कनेक्शन होने की वजह से पैसा हमारा सेफ रहेगा। दूसरा तो ये बैंक बहुत मतलब RBI गवर्नमेंट बैंक है, इसकी वजह से लगभग अच्छा ही वो होगा रिजल्ट।
As he was explaining the benefits of CBDC, the small denominations which were a problem for payments earlier, which was solved by UPI. Now we need to wait and see whether or not this could be the UPI moment. You would have seen that how UPI became a success over the years. It will be seen after the launch of CBDC whether or not this is the UPI moment for India.
All right, and that was actually my colleague Ankur on the ground actually explaining what the new e-rupee would mean and what sort of a game changer it could turn out to be. But let's move on. And even as Mumbai's airport T2 reeled under tech system failure in yesterday evening or the whole afternoon, 3 other airports also embarked on a novel journey towards paperless travel. My colleague Vikram Oza is here to explain to us what Digi Yatra is and what does it mean for you and me.
India, again in the civil aviation sector, is at the cusp of a paradigm shift.
Yes, a paradigm shift indeed. The future of air travel seems to be here. The Union Civil Aviation Minister, who you just heard, Jyotiraditya Scindia, has officially launched the Digi Yatra service. Initially, it's for 3 airports, and those are Delhi, Varanasi and Bengaluru. And the centre is aiming to make the service available at 4 more airports in India, and this they plan to do by March 2023 is what we are given to understand. Clearly, it's another push towards digital India. But what exactly is it? What is Digi Yatra? It's being called a biometric-enabled seamless travel experience, or best experience. Well, it uses facial recognition technology for sure, and this to provide paperless travel experience. But how do you actually use it? My colleague Samir went down to the Delhi airport just to see how it works, and this is how we're showing you how Digi Yatra is actually functioning.
You just have to download a Digi Yatra app on your mobile. phone, and that you can download either from iOS or Android platform. And on the Digi Yatra app, you can register yourself by providing your Aadhaar card number and a self-clicked image. That will be validated, the credentials will be verified, and after that you can go to airport. Now let me tell you that how it actually works. So it simply means that on Digi Yatra app, after verifying your identity through the Aadhaar card, when you will come to airport, you will see that this sort of digital gate will be there. And this digital gate means that you have to scan your boarding pass or the air ticket. So this is the scanner where you have to scan your boarding pass or the air ticket, and once this scanning is done, then your facial recognition will be done.
Looks easy enough, doesn't it? Well, the government seems to have big plans for it. India is not, of course, the first nation to use this technology after all. Listen to what Mr. Scindia had to say.
It is the right time to start this process across the country. Across the world, we have many examples of this. Heathrow in London, Changi Airport in Singapore, Dubai, Atlanta, Narita Airport in Japan, and all have yielded tremendous results.
Yields may be great, but there are concerns too, and we are not talking about teething troubles. For starters, from books like 1984 to pop culture on surveillance states, cameras tracking humans all the time, is not quite utopia. Quite the opposite, in fact, with the data protection bill that is still under discussion. Now, Digi Yatra is a big red flag. Cybersecurity experts have warned of the possibility of data misuse. The more pessimistic of the lot, they worry about the beginnings of a surveillance state. As of now, though, the Digi Yatra is a voluntary service. It certainly seems to be making travel much easier.
And moving on to GST collections for the month of November, the collections came in at 1.45 lakh crore this month, making it the 9th consecutive month that the collections were above the 1.4 lakh crore mark. Now, the GST revenue collections witnessed a surge of 11% on an annual basis for the month of November. Revenue from import of goods was 20% higher, while revenue from domestic transactions were 8% higher than the revenue from the sources on year-on-year basis.
Right, and moving on, let's talk about an important development on the global front as well as national front that took over. India has now taken over the G20 presidency for the next 1 year. We spoke to Amitabh Kant, who's the Sherpa of G20. He spoke to Tamanna about the challenges India will face as the world is divided over geopolitical tensions.
You mentioned, Mr. Kant, some of the real tangible outcomes of G20 in the past. What will be the aim during India's presidency? And there's no dearth of things to pick from. If there can be some solution to to the Ukraine-Russia war, if there can be some solution to actually getting, the push towards stopping climate change, there's a lot that we can choose from. What do you think the focus will be?
So the Prime Minister has spoken at length on this at Bali. He's dwelt at length in his editorial in many papers today. Broadly, one is that in the present context, it has to be inclusive, resilient and sustainable growth over a long period of time. We have to take care of the citizens, so the segment that have fallen behind in terms of education outcomes, health outcomes, nutrition, about taking SDGs along because we are midway through the 2030 agenda.
On that note, we're going to slip into a very short break. Viewers, don't go anywhere. We'll be back with more updates after this break.
Welcome back. You're watching Market Cafe right here on ET Now, and let's take a check of what the Asian markets are doing at this juncture. So it's a mixed picture coming in for the Asian markets. As you can see, Nikkei, Kospi, both of them in the negative is Nikkei that is actually losing the most, approximately 2% downtick coming in for Nikkei, which is the Japanese index. Kospi also trading lower by about 1% at this juncture. Take a look at Shanghai and Hang Seng. Flattish move coming in for Shanghai. It's flat with a positive bias. But if you look at Hang Seng, that's the one that is actually bucking the overall market weakness. It was actually trading much higher than these levels, but now it's reduced. So it's now about 0.3% higher at this point in time. If you look at the MSCI Asia Pacific Index, it is actually seeing a mildest decline, about 0.2% decline coming in. But nevertheless, the MSCI Asia Pacific Index for the entire week is set to rise by about 4.2%, and which is actually the highest level since September. So right now, if you can see, mixed picture for the Asian markets. SGX Nifty also indicating a pretty muted start for us, but that dollar index, don't lose the sight of that one, because it is at the lowest level since August, falling below that 200 DMA at this juncture. But Vinny, that's the way how the Asian markets are looking like. Muted start is what we should brace ourselves for. I should be on the rupee, but apart from that, also the auto sales, isn't it?
Absolutely. And moving on to actually, that auto sales number, yesterday we saw them pouring in as well. Let's bring on board Shrishti to decode how the numbers were. What is it looking like for the month of November in terms of auto sales?
So for the November month, if we see, so it was a kind of a mixed bag this time around. So we have to look at a segment-wise performance. Firstly, let's start with the passenger vehicle segment. Here we were expecting the destocking to play its role. So this time around, it was an inline set of performance by all the major OEMs. Although there was an outperformance seen when it comes to the numbers of Tata Motors in the automotive division, but nonetheless, the underlying demand is quite very strong, is what the OEMs are highlighting right now. Coming to the commercial vehicle segment, here we are seeing a bit of a double-digit decline from the numbers of Eicher Motors as well as Tata Motors, but an outperformance coming in from Ashok Leyland numbers, where the company clocked in a sales of 14,561 units, and that's 1,000 units above what we were expecting at ET now. In the two-wheeler segment, it was a bit of a disappointment from all the major OEMs, except, and the exceptional case out here is Hero MotoCorp, because if we see from the numbers of Bajaj Auto, TVS Motors and even Eicher Motors Royal Enfield, the numbers are way below than what we were expecting, and especially in Bajaj Auto and TVS Motors, although the exports were in line to what we were expecting, but on the other hand, the domestic demand and the domestic sales did not flare up that better, so that was actually reflecting in the stock price as well. But coming to the Hero MotoCorp numbers, the company clocked in a sales of 3.9 lakhs of units, and that's a jump of 57% on a month-on-month basis, and a surprise coming in the tractor division, where we saw an outperformance from both the companies listed out there. So it was a kind of a mixed bag for the auto sales.
Thank you so much for that, Shrishti. But giving major relief to oil market companies and customers, the centre has revised the windfall gains tax on crude products. The special additional excise duty on crude petroleum has been more than halved to 4,900 rupees per tonne, and the duty on ATF, though, has been left unchanged. So that is one of the biggest developments that transpired overnight yesterday after market hours, to be very precise. But one of the biggest development will definitely be in what is going to happen in Paytm, Vinny, isn't it?
Absolutely, yes, there was an analyst meet yesterday. A lot of updates that have come in on that front, and the main address of concern was around its business model. Now, the company is highlighting the ability to drive the revenue growth and monetize its customer base as well. It gave additional disclosure in this analyst meet on various lines of its business as well. Now, on the payment business, what the company highlighted is that the net payment margin will remain positive and maybe stabilize a bit, though at the lower levels. And in terms of the rental income also from devices is likely to grow at a healthy pace. Now, that's on the top line front, the revenue front. Now, other than that, the financial services also, they are highlighting that it is witnessing healthy growth driven by the seasoning of loan across products, and it also reiterated the opportunity size and the revenue pool that remains quite large for the company, and which should drive the growth in the coming years for the company. Now, on the back of this, we have seen that analysts seem quite enthused by this. Axis Capital is actually maintaining a buy on this one, and the steady increase what the company is highlighting in terms of contribution margin and operating leverage is something that will drive the EBITDA higher as well. What analysts are saying. Axis Capital as of now maintaining a buy, giving a target price of 1,000 for Paytm.
All right, and apart from Paytm, there's another stock that's been in focus through the course of the previous month, as the month of November, and that has been Policy Bazaar, and it's in focus once again today, Vamakshi, and that will be for another block deal that is set to take place. Tell us who is looking to actually dispose of stake in PB Fintech this time around.
Well, good morning, Cheryl and Vinny. Now, PB Fintech will definitely be in focus, and like you rightly pointed out, SoftBank is set to sell almost 5% stake worth almost 1,000 crores is what our sources are telling us. They're looking to sell around 2.2 crore shares, and the deal base price is around rupees 440 per share, which actually implies a 5% discount to the current market price. Now, after this deal goes through, SoftBank's stake in the company will almost halve from almost 10% to 5%. So that is the news flow surrounding this counter today, but nevertheless, it is important to note what the stock has been doing this year. Now, it is down almost 62% this year. Nevertheless, recently, after Powell's comments came in, we saw new age stocks rally on the slowing pace of the rate hike. Even analysts appear to be quite positive on this stock. Almost 91% of them have a buy rating on this counter, with a 12-month implied target price of almost 693, which is a nearly 50% return potential from the current market price. So that was PB Fintech for you. SoftBank looking to sell 5% stake in the company is the reason why the counter will be in focus today.
For that, Vamakshi will definitely watch out for PB Fintech in today's trading session. Remember, SoftBank is looking to actually sell some stake in that particular entity. But apart from SoftBank and Paytm, Vinny, Westlife Food, I believe, is
Food World now.
Food World now. That's the one that will be in focus.
Absolutely.
And why is that?
So, Westside Food World or
Apart
McDonald's.
Apart from it being Friday, yeah.
Absolutely, Friday. But yes, why is it in focus? Because they've come out with a vision of 2027. You know, they're highlighting a lot of growth coming in for the company. You know, when you look at it in terms of sales also, just the vision for 2027, they're saying that they are expecting sales of 4,000 to 4,500 crores coming in by 2027. Currently, you know, the estimate for FY23 is 2,300 crores approximately. Also, the company is saying the same source sales growth will settle in somewhere in high single digit, as well as in terms of revenue. Restaurant openings, they're expecting restaurants to double by 2027 as well. So restaurants, they're expecting around 580 to 630 restaurants by 2027. Currently, there are 337 restaurants. This is as of Q2 FY23. In terms of EBITDA margins also, operating margins, 18 to 20% is what their target is. FY23 estimate is somewhere around 17% as well. Now, obviously, their main strategy and pillars of growth will be the meal strategy, where they want to achieve leadership and core in terms of the menu innovation, marketing of that as well. Then faster network expansion is what they're focusing on as well. They have a plan to set up almost 40 to 50 per year versus the historical run rate of just 20 to 25 over there as well. And analysts are saying that, you know, the shift towards, you know, focusing more on organized players, branded players, that will continue. So obviously, Westlife will be one of the key beneficiaries in terms of that as well. And this newfound enthusiasm by the management in terms of doubling their stores will likely lead to a re-evaluation in terms of the stock as well, and exponential growth is yet to be leveraged for their other platforms, whether you see Mac Cafe, etc. That is still to be leveraged, so that is going to be a positive coming in for Westlife as well.
Definitely. So that is Westlife, what to watch out for that particular company. But my colleague Vamakshi is here. And Vamakshi, Westlife, apart from this particular development, will be also in focus because you have a brokerage note. And apart from Westlife, which are the other companies that you need to watch out for in back of brokerage reports?
Well, absolutely, Cheryl. Let's first start off with Westlife. Motilal Oswal has come out with a note on this counter. They're highlighting that Vision 2027 plans indicates management confidence on the prospects of a healthy growth. They're also expecting QSR industry to grow at a very healthy pace of almost mid-teen CAGR over the next 5 years. Management is also in talks with McDonald's Corporation to stagger royalty rate increases beyond FY26. So overall, Motilal Oswal has maintained a neutral rating on this counter. They've given a target price of 805 per share. Apart from that, we also have Divis Labs in focus. We have a report that has come in from Morgan Stanley. Now, they say that protracted visibility is beyond 18 to 24 months for key product launches. They also see rich valuations, which has tempered their view. They believe that Divis Labs is a strong business, but is in a lean phase, which is why they have initiated coverage on this stock, but with an underweight rating. They've given a target price, which is on your screen right now, and that actually implies a downside of almost 10% from the current market price. price. Apart from that, we also have M&M on our radar. We have Nomura coming out with a note on this counter. They are bullish on M&M considering the global auto outlook, strong product pipeline for SUVs, multiple growth catalysts for its farm segment, and improving profitability at its subsidiaries are some of the growth drivers for this counter. Valuations for M&M also look quite attractive, which is why Nomura has maintained a buy rating on this counter. They've given a target price of 1,616, which is a nearly 25% upside potential for this counter.
Those were the brokerage notes coming in this morning. But let's bring on board Ashesha to talk about actually one stock today, that is NMDC. You track the space very closely, Ashesha. And you know, the government is actually looking to sell around 50% of stake in NMDC. So how does this work out for the company? What is this actually coming in for NMDC?
Yes, you're correct. NMDC will be in focus today, and that is because government has invited bids to sell about 50.79% stake in NMDC Steel. Remember, they've issued preliminary information memorandum for strategic divestment of NMDC Steel, and expression of interest have to be submitted by the 27th of January. Remember, government currently holds about 60.79% stake in the company. It intends to sell 50.79% stake, which means that it will be left with the balance 10% in the company. On account of majority stake sale, management control will also be transferred to the buyer. As far as the balance 10% stake is concerned, they've also mentioned that they will be offering the balance 10% stake in resulting company to NMDC after the strategic buyer has been identified, and that will be done through the bidding process. As far as the steel plant is concerned, NMDC is already in the process of setting up a 3 million ton per annum integrated steel plant, which is in Chhattisgarh, and they've said that this is under construction and it is likely to be commissioned by March 2023. Remember, the company has already spent incurred a total expenditure of about 22,000 crores on this particular plant, and the demerger of steel plant from NMDC, which is the listed entity, is already in process. Important to know that MCA had given its approval for this particular demerger on the 6th of October, and currently it is in the process of demerger. So for now, it will be in focus because the government intends to sell its 50.79% stake in the steel unit, which is in the process of getting demerged.
Right. Thank you so much for that important development and telling what that means for NMDC. Remember that what the government is planning to do is they are seeking bids to sell over 50% stake in NMDC Steel, that is the arm. But let's move on and let's get you an exclusive story that's coming in from Economic Times, and sources have told Economic Times that Tata Trust Board of Trustees is likely to be considering a few internal candidates for the post of the CEO. This is after Srinath Narasimhan, Tata Group veteran, who retired at the age of 60. The names that are being discussed include Siddharth Sharma, who is Tata Sons Group Chief Sustainability Officer, and Sukaran Singh, who is the CEO of Tata Advanced Systems. This is as per sources, and this is as per Economic Times. The Tata Trust holds about 66% of Tata Sons, the group holding company, and the Board of Trustees will also consider other candidates, and no name has been finalized just yet. But for now, what Economic Times is picking up through its sources is the fact that they are actually scanning through some of the internal candidates for the post of CEO of Tata Trust Board.
Okay, let's move on and talk about the Indian markets. Rhythm Desai says that Indian markets will not peak anytime soon, and what he further highlights is that he believes that India could actually relatively underperform the emerging markets rebound. Let's go across and listen into that snippet.
Next year, earnings I think will still go up. Okay. The PE may fall a little less, and therefore the absolute return may actually be a little better. So the context is of the world. So just to put it into context here, my US strategist thinks the SPX finishes next year at 3,900, which is an absolute downside from here, okay, still. And he's been very cautious all through the last 12 months, and he's been right, and he remains relatively cautious. He does think that the bear case scenario may take the SPX down materially from here, but in his base case scenario, SPX is trading flat. My emerging market strategist thinks markets like Korea and Taiwan could be up 20%. So India fits somewhere in the middle of 0 and 20. It's unlikely due to 20 because Korea and Taiwan trade at near one-time book. Okay, they're so beaten down that a little bit of earnings recovery and the multiple will rise. In India, I think we're still in this multiple consolidation phase. There's a bull case scenario in which that changes, but in the base case, I think we're still in that phase.
The most powerful number for me in this report, I'm just speaking for the benefit of our viewers, the way Rhythm looks at is that he absolutely looks at earnings growth. You are making a case for a 20% CAGR earnings growth on a large base for next 3 years. Now that's a very powerful endorsement on earnings, because ultimately what you can predict is earnings. P multiple, market price, flows, technical, those all are derivatives.
Yeah.
I'm breaking it for the benefit of our viewers. So let's try and understand that what gives you the conviction of this kind of a strong earnings growth, because within 20% plus, which means 3.5 years you expect earnings to double from here.
Yeah. The main anchor to earnings is capex. If you can get capex going, you get earnings going. Until that capex becomes unproductive. And then, of course, the economy slows down and you go into a slow growth or recession. But we are really far away. Look at corporate balance sheets, heavily depleted in terms of capital stock. No investments in the last 12 years. Look at corporate leverage, debt to GDP. Corporate debt to GDP is 46%.
That's less than 50. It's not 6 actually.
Yeah, down from 62. Private sector credit to GDP is 57%. China is at 225. US is at 200 plus. Bulk of Europe is at 200. India is under-levered. So you have balance sheet strength and you have a growth cycle that's recovering. It's an ideal combination for a credit boom. And a credit boom essentially means higher growth. So this is a very sweet environment. The key risk is what the world does around us. The second half of next year will probably be trading around elections rather than earnings.
Okay. So since you've already preempted my question, I won't go on that path, that what will happen exactly a year from now when markets will get into the election zone, so to speak. But your case of a 20% earnings growth, let's divide that into two parts. There are some sectors which will have to grow at 25% plus, 30% plus, and some sectors will grow at 20%, below 20%, and the mean could be 20% plus. Draw that line for us.
That's very easy. All external facing sectors will probably underperform. So global materials, energy, and to some extent even software services. They'll underperform in terms of earnings. May not underperform in terms of share prices, we'll come to that, but I'm just addressing earnings. All domestic facing sectors which are cyclically oriented, like discretionary consumption, industrials, and financials will outperform. In addition, I think some defensive domestic sectors will also underperform, like utilities, consumer staples, telecoms will underperform, healthcare. So I think that's how you look at it. Global sectors and domestic defensive sectors will grow less than 20, and financials, consumer discretionary, industrials, your quintessential, cyclical, rate-sensitive sectors will grow more than 20. Increasingly, I think people are gaining confidence that India has arrived on the scene. And a lot of people feel that India has had a lot of hiccups along the way, that it has faltered along the way. But the data does not actually support that view. Because if you look at the last 5, 10, 15, 20, 25 years, India has been the second fastest growing economy in the world, and it's been amongst the best performing stock markets in US dollar terms. Okay, so anyone who says, oh yeah, we've heard this, but India is always disappointed, that's not true. India is a long way to go before it maxes out, so this is really exciting.
Last time when we met, we spoke about why this decade belongs to India, and you outlined the big pillars. But today let's talk about FY23, the coming year, and the report which you've released, 2023 India Strategy Outlook, absolute upside, relative downside. Explain that to us.
So I think India has done extremely well, as we know, this year. It's outperformed emerging markets by 30 percentage points. That's a staggering amount of outperformance. At worst, the Nifty is flat. Everything else around it has gone down.
All right, and on that optimistic note, we'll shut shop for Market Cafe. Then it's a goodbye for Vinny, myself, and Shriyansi, our producer, and the team that put the show together. But stay tuned, we have an action-packed lineup coming up on the market for you.